Hello, folks. This is Andrew Nadeau from Stonehearth Capital Management here with an educational economic update for July 2021. In this month's video, we'll discuss some recent headlines that influenced the financial markets in June. I will also provide some perspective on what these developments may mean in the months ahead. Please stay tuned at the end of this video for a required disclosure statement. Stocks closed out a strong quarter in June as the economy continued to recover and recent headwinds such as inflationary pressures appear to be peaking. The month started out slow as the latest reading on the jobs market continued to fall flat of expectation. And although job growth has been positive, with 559,000 new jobs added in May, this was well below economists' estimates of 650,000 new jobs. Stocks moved higher later in the month, though, as price declines for commodities such as lumber gave investors hope that record prices may begin to fade as supply chain pressures continue to ease. And President Biden's announcement of a bipartisan infrastructure plan also helped boost investor confidence in June. And stocks finished the quarter mostly higher, with only the Dow lagging behind. The Nasdaq led the charge for June, climbing 3.88%, while the S&P 500 rose 2.22%, and the Dow was slightly negative, falling 0.8%. Over the past several months, residential housing sales have continued to slow. In May, sales of existing homes fell for the fourth consecutive month, declining 0.9%, after decreasing 2.7% in April. Nevertheless, though, over the past 12 months, existing home sales have increased 44.6%, and the average price of an existing home is also 23.6% higher than it was a year ago. And the consumer remains confident in the state of the economy, with the latest reading from the Consumer Confidence Index advancing 7.3% in June to 127.3. According to the report, consumer confidence is at the highest level since the onset of the pandemic in March 2020. And while inflation remains a headwind, this appears to have little impact on consumers' confidence or purchasing intentions. As we move into July, most Americans now have the freedom to move about with little to no pandemic-related restrictions. This should continue to lend itself to a further pickup of economic activity and improvement in the labor market. Investors will be watching for the first estimate of second quarter GDP as a gauge for the health of the U.S. economy in July, as well as improvement in the next jobs report, especially in the leisure and hospitality sectors. That's it for this month's Educational Economic Update. Once again, this is Andrew Nadeau with Stonehearth Capital Management signing off for the month of July 2021. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 978-624-3000. We'd be happy to talk to you. Thank you.